All right, guys, I know. Weekend's over. Back to work tonight. That's all right. Got a big week ahead of us. Got some more money to make with you guys tonight. It's Monday evening. We're getting ready for Tuesday's trading session. We have a lot to cover tonight. Got a big week of earnings and big news ahead of us. And boy, if we do half as well as we did last week, a big week of great trades coming in front of us here as we finish up the last full week of the month of January. We're getting ready for Tuesday. We got a lot of great trades I'm tracking. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in and get this party going tonight, make sure you subscribe to our channel, hit that notification bell so you don't miss tomorrow night's video upload. And if you guys enjoyed the video tonight, give me a holler, do me a favor, hit that like button, give me a shout out in the comment section below. I'd love to hear from you guys in the comment section. Thank you so much for tuning in and supporting this YouTube channel. But enough of the intro, right, Joe? Let's get ready for Tuesday. Tuesday is not going to trade itself, and I'll take a lot of great trades setting up for Tuesday's trading session. Now, got a bunch of ranges on the charts right now. Nasdaq and the S&P are all pretty darn bullish. Boy, a lot of breakout opportunities here right now for both the Nasdaq and the S&P. Were firmly in the hands of the buyers. We talked a lot about that last week, of course. So buyers, of course, have all this potential for a breakout going higher here. I would love to get some bear traps. I think some bear traps would be just fantastic for tomorrow. I'll talk about why I like the bear traps as we go deeper into the video. And I'll tell you, there's no problem with some reversals, right? I've definitely got my eyes on some reversals, but we'll talk about tonight how we really got to be careful trying to pick tops on a market like we're seeing right now. So S&P, NASDAQ, we got some money to make on that this week. We'll give you guys a game plan on that. Oil's a bit nasty right now. Got a failed rotation. Again, a lot of potential for breakouts on oil right now because of the rotation off this range. You'll see tonight on the video. But just like on the S&P and the NASDAQ, I'd love to get some breakouts, some bear traps going lower here. I'll talk about why. Oil's got a lot of really interesting clues. So a lot of great learning and hopefully some profitable setups setting up for tomorrow on oil. So you definitely won't want to miss that chart here for tonight. Now, before we jump in, I'm going to go over all these charts and talk about my favorite trades here. Before we jump in, though, let's just make sure we all kind of get on the same page here for tomorrow because, well, first of all, we got some big news tomorrow morning. We got the PMI number tomorrow at 9:45. So that will definitely be a pretty good catalyst. I love looking for trades between 9:45 and 10:15 in our trade room each morning. So having PMI number there at 9:45, that's definitely going to be the biggest catalyst during the session. We've got more big news coming later on in the week, so the hits will keep on coming. But also be aware too, like I mentioned last week, we're kind of going into the busy part of earnings season. They call it earnings season because it's about 5 weeks long, but we have to pay attention to 2 big weeks, this week and next week. And you'll notice, right, tomorrow, Tuesday, we've got a couple names that you might recognize, right? Some Johnson & Johnson, Verizon, GE, of course, before the open tomorrow. And you might have heard about this little company called Microsoft, right, after the close tomorrow. Now, if you've watched my videos before, you know I'm a really big believer in don't spend a second of your time, don't spend any energy at all tomorrow in looking at what the actual earnings are. That is irrelevant. All we care about tomorrow is how the market reacts to them. So I'm not going to talk about if they beat or if they miss. It doesn't matter to me, and it shouldn't matter to you if you're a technical trader. So the most important thing that you want to be aware of when it comes to earnings is that earnings are going to be released before the open and after the close, and volume is very low during this time. So the next 2 weeks, you really got to be careful in the pre-market, the post-market. We'll obviously talk more about this in the trade room tomorrow. But again, first thing, don't pay any. I mean, you can do whatever you want, but I will be spending all of my energy on trading the reaction to those earnings. And again, until we kind of clear through by the end of next week, before the open, after the close, please be careful because it's low volume during those times. And Again, no matter what the earnings amount, markets can really whip, and boy, you can make a lot of money, you can lose a lot of money, and I don't want you guys to go taking big chunks out of your account. That's really unnecessary. So be aware of that. Earnings before the open, after the close, and again, I'm not going to go into too much detail about each individual earnings report. You're more than welcome to do that, but again, I will be focused tomorrow in the trade room and the rest of the week at how the markets react, because that's where the money is, right? That's where the money is made. So we'll come back. We'll talk more about that as we go deeper into the week, but be aware, 9:45, that's the big news of the session here for tomorrow. Now, let's go over all of my favorite trades on S&P, Nasdaq, and crude oil. Guys, if you like making money, make sure you watch all the way to the end, because every setup that I talk about can be applied to your favorite market. Don't just watch your favorite chart. I'll talk about different setups that can apply to your favorite market as we go deeper into this video. Let's go S&P first. We'll go S&P, we'll go Nasdaq, and of course we'll wrap tonight on the crude oil. First of all of these are tick charts. They're all tick charts. You can find the tick charts in the upper left-hand corner. That is the 21 EMA. It's one of my favorite indicators and pretty much the only indicator that I need to use to find profitable trades. Be aware the S&P and the Nasdaq are very similar, so we'll go back and forth between the S&P and the Nasdaq, right? So we'll talk about the S&P and Nasdaq back and forth tonight. And as always, I do like to give you guys some additional slower time frames down the description of the YouTube video. So everything I talk about tonight, hit me up in the description. I'll put a bunch of slower time frames down there so you can see a bit of a bigger picture look, because that will be a big part of the lens in which we look at these charts right now. There's a lot going on right now. We have an overall bull bias right now on pretty much everything. We talked about this last week. I mentioned how I wasn't quite convinced that moved down, and sure enough, right, it definitely was. Which reminds me, I will tell you the exact same thing I told all of our students this morning in our trade room. I don't care how much money you made last week. We had a great week. I don't care how much money you made on Friday or today. Our job right now is to stay disciplined and focused, take low risk, high reward trades. We're only as good as our next trade. So please don't let that beautiful squeeze, I know a lot of you guys grabbed last week, please don't let that put your guard down and go giving that back because you're over trading this week. All right. I don't care how much money you made last week on those moves. We want to buckle down right now and really make sure we stay disciplined this week. Anyways, off my soapbox. What's the most important factor right now on the S&P? The most important factor on both the S&P and the Nasdaq, it's a strong move up into a trading range. Ranges love to rotate. So they'll go up, they'll go down, and now they're trying to rotate and run higher. So obviously breakouts, right? Breakouts are a big factor on this, and we'll talk about some breakouts. We'll also talk about some fake out breakouts, right? Because buyers want to buy the breakouts going higher, and sellers would love to short those fake out breakouts. So I'm going to talk about that quite a bit. My favorite trade for tomorrow, if somebody was to ask me what would I like to get tomorrow, I would love to get a bear trap, right? I'd love to see a bear trap, another leg down, trapping some bears, pull the string, and back up into that trading range. Now, let's face it, what should happen right now is we should rotate higher, right? This trading range will want to rotate off that low and punch and run higher. I've got my eyes on this 40.90 and 3/4 area for a kind of a medium-term target, and then of course up from there we get a bunch more levels above that. But right now the buyers would love to get up around that 40.90 and 3/4, right? 4100, give or take up there. That's what should happen. Again, my favorite trade though is, which we'll cover a little bit later on in this video, so don't you go clicking off just yet, right? Is that bear trap going lower here. So how do we trade some breakouts going higher? There's a couple ways, again, because that's what should happen right now. And, we'll see what we get, obviously, right? I don't have a crystal ball. I just know what a good trade looks like, and we'll see what we get here for tomorrow. Let's talk about breakouts going higher here. There are really four different types of breakouts going higher here. The first one is the kind of the most likely is the pop and grind breakout, right? So we pop up, we take out these highs, and we begin to grind, right? And grind and grind. grind. These pop and grind breakouts are very, very easy because you can draw a trend line off those highs, bring it down to that low, and then just like I talk about in the free trading course, I can go looking left and finding prior swings and go in for bear traps underneath prior swings, get underneath the 21 moving average. Bears might come in and try to short this, like right there, right? Beautiful seller failure pattern, right? Into a pullback combination here, right? So again, pops up, begins to grind, going higher. I anchor the channel off the high. I bring it down off that low. Bear trap, seller failure, pullback combo, strength trade, all the same entry patterns that you guys are learning in the free trading course right now, right? Which I know you guys are doing well with. Another one, right? Another one you want to keep in mind will be a 1, 2, 3 breakout. So we take out the high, we pull back to the 21. Okay, we don't flutter higher. We pull back and we blast right on through that high. These are pretty simple. They're called 1, 2, 3 breakouts. 1, take out the high, or 1, break above the range. 2, pull back to the 21. And the third part is the really strong blast, right, off of that moving average and clearing convincingly through the high of that trading range. Once we see a 1, 2, 3 breakout pattern, what I can now do is, again, mark that trend line off the high, find that channel off the low, and again, look left, find some prior swings. Swings are where traps live. The moving average gets above us. That's where failures live. Trap, failure, pullback, right? All the same stuff you guys are learning inside that free trading course off the low of that channel. Which reminds me, I know that most of you guys are taking the free class right now. I love getting the screenshots of your P&L, so keep them coming. It's great to see everybody making money or being at least getting better each day on that free trading course. But listen, if you're here for the first time, if you're one of the few folks watching right now who haven't taken that free trading class series, I'll put a link up there for you in the upper right hand corner. Grab that link, take that free trading course, because I'll tell you, the strategy that I teach in that free class will show you a simple trick to know where the winning trades are more likely to be each day. It's remarkably simple, and I'll give you 4 different entry patterns to help kickstart you making money. If you're tired of missing the best trades each day, if you're not getting the results, grab that link, take that free course. It's perfect for someone trying to make the jump into full-time trading or add another form of income stream. It's great. You get a good roadmap there. So grab that link. And again, I'll put all the other links here. I'll put all the links in the description of the video as well. One more breakout. Let's do 2 more breakouts. Okay, 2 more breakouts, and then we'll talk about the reversal. Okay, and then later on in the video, we'll talk about the bear traps, because that's what I'm hoping for here for tomorrow. Another breakout pattern, right? Another breakout pattern. Overnight, rips higher, right? Real strong pop up. Strong move, shallow pullback, higher high in price, traps, baby. Now remember, on this one, that leg right there needs to be really strong, right? And really ideally, you're going to want to get these entries up above these prior highs, right? So repeat after me, right? Strong move, shallow pullback. The shallow pullback is a big part of this because it doesn't allow buyers to buy deep, right? It doesn't buy the dip. The higher high confirms it's not just a reversal. And we'll talk about the reversal here in a moment. Strong move, shallow pullback. That's the FOMO going, right? Higher high. That gives us now that trap. And again, we get a pretty good idea, right, of kind of where the market wants to go up overhead. One more breakout, big move, right? And this may seem a little bit unrealistic right now, but who the heck knows? If we do see a really big move going higher, anytime we see a big move, what do we think? Don't chase it. It's too high to buy. Whenever I see a really big move, what I'll do is I start looking at the prior highs here. I go, okay, that's where I want it. Find that new channel right off that high, and then wait for a nice deep pullback. right? Usually it'll be, and the common question is how deep does the pullback need to be? Deep enough to the point where it feels like a reversal. Once it feels like a reversal, you got those bears trapped in, let them short off that 21 and just buy right into those stop losses, right? It's a very, very easy setup. So if for some reason this thing just rips overnight, again, what should happen is we should get that rotation going higher. If it rips higher overnight, remember, we're way high up. We don't want to chase it up there. We go out and find bigger channels. We find prior swings, right? I like to use those prior highs. And again, we wait for that nice deep pullback, right? Again, how deep? Right when that little voice in your head says, my goodness, maybe that's a reversal. Bingo, that's usually right about when it's deep enough. Don't take the bait for the reversal, right? Look to buy right into those stops, and easy paycheck in most cases back up to retest the high. All right, we got 4 different ways to make money on the breakouts going higher. Now, how do I sell? How do I sell off the high here? Well, first of all, you have to understand we are a very bull bias right now. Again, and we talked about this a lot last week. I'll put some slower time frames. You can see on the 60-minute chart right now, which is linked up in the description, you'll notice it's very difficult to call this a bear market. Now, if it was a bear market, I'd be a lot more inclined to call a reversal, right? But I kind of want to go with that momentum. It's easier to make money. It's easier to get consistent results. So if we get this rotation going higher, ultimately the buyers, they want to take out that high, but they're going to want to take out that pendulum swing, right? So you got to be careful picking the top on this. The only way I would really like to short this thing as it goes higher is to go up, take out the high, and then get what I call a crown reversal pattern. Crown reversals are really simple. The buyers have all momentum, right? The buyers have all that momentum. But remember, they have to kind of break out, right? They've got to kind of break out. So if we do see a situation where the buyers struggle to get that breakout, right? They don't pull back and jump, right? They don't flutter higher here. No, they pull back to that 21 moving average. The buyers try to go once going higher, they fail. They try going twice going higher, right? See how I draw that? They run up. The buyers are trying to keep it going, right? Okay, give them 2 tries. Let them try once. Pull back lower. Let them try twice. Buyers want to buy low. At this point now, very, very bullish. If it goes lower, there could easily be more buyers coming in, right? So we don't want to sell it as it goes lower because, again, it's a very bull bias right now. We want to what? We want to sell that bull trap, right? That bull trap is the only real safe way to short a bullish rotation like this, right? A bullish rotation in an overall bull market. Right? Does that make sense? If you understand this pattern, remember, the key is I don't just want to try to get the buyers trying once, trying twice. I don't want to sell it down here. Okay, I don't want to sell down there because, again, think about it. There'll be a trend line right there, a channel right there. It's very easy to get caught in a trap and then rip your head off as it runs higher there. I don't want to sell it as it's going lower. If you're trying to call a top in a bull market, you have a very important job, and that is to get something to go above a prior high. That way, by the time you do get that move going lower, if it does end up ripping higher, you've already got your profit, right? By shorting at resistance on a bull trap, which is basically what a crown reversal pattern is. Okay, and you'll see a lot of examples of those inside that free trading course I mentioned earlier. But by selling high now, if they come in and they hold that low, okay, I didn't make a killing on the trade, but at least I'm not losing money. Right? At least we're not losing money. And if the buyers do get that trap, right? If the buyers the trap here, where do they want to go? If the sellers get that crown reversal, right, where's the target? The target now is back down to retest the low, right? So that becomes the easy objective. And then from there, once we get down around that low, yeah, that's where those bear traps will come in. So let's talk more about that, right? How do we buy now off the low like that? We got a pretty good game plan now, I think, on the S&P 500. How about some NASDAQ? NASDAQ, again, NASDAQ, QQQs, they're all pretty much the same stuff here right now. The most important factor here on the NASDAQ is, again, bull market into a trading range. The market again, range-bound markets, they love to rotate. We call these rotation off the low, right? So they rotate, they pop up, they don't get a breakout, they rotate lower. And now what should happen is we should finish off this rotation either for a breakout. We talk about 4 different breakout patterns going higher. Or we end up going back to that high, stalling out at the high, and back down into that trading range. That's that crown reversal pattern that I just mentioned just a few seconds ago, right? So now the big question is, if we go lower, right? I'd love to buy some bear traps down here. There's a couple easy ways to buy those really big, deep pullbacks. So you can see a channel I'm looking at, right, on this Nasdaq. It's pretty large, right? But this is how you find some bear traps, right? You mark off those lows, mark off those highs. Remember, we're overall very bullish. Okay, overall very bullish. It was a really big move today. And remember, we had that beautiful squeeze last Friday. So when you think about it, it would make perfect sense, because look at this thing, right? Look at how big that move is with very little pullback. So remember, anytime you see a really big move, anytime you see a really big overextended move like that, it makes perfect sense that, as we go higher, the buyers might say, you know what, I'd like to buy a little bit lower than this. They take it lower because, of course, there's not enough buyers up here to keep it going. And we hopefully can get some bears coming in, falling for that reversal and getting squeezed, right, for that run back up. I have the exact same kind of scenario here setting up on the S&P as well, right? The S&P also, of course, has that. I took it off the chart, right? But there's that channel, right? So S&P too, right? S&P has that just enormous, right, run going higher. I don't think anybody would be surprised if we made one more leg lower, trap in some bears, right, to attract in some buyers at a lower price, and then rip it right back up to retest that high. So that's the overall vision of it, right? Now, again, remember, what should happen right now is we should see this thing rotate and punch higher. Let's talk about bear traps, though, as we go lower. There's really two reliable pattern setups I like to look for when it comes to kind of another deep pullback. So, for example, let's say, we open up in Asia, we end up making our way down here, right, overnight. Again, I got a lot of reasons here, like I mentioned earlier, to think about trapping in some of these bears right now. As we go lower, what is momentum going to feel like? I get it. We're overall very bullish, right? We're definitely overall very bullish. But if this thing rolls over overnight, right? If we roll over and end up going lower here overnight, this will feel very, very bearish, right? In the short term. I'm a short-term trader. I assume if you're watching this right now, you're a relatively short-term trader as well. So momentum will be relatively bearish. It's a really deep pullback. Now, we love deep pullbacks because deep pullbacks allow us to risk small to earn large, but with a deep pullback, you pay the price for that big potential reward. The price is momentum. So this is where the 2-try rule comes in handy. As we go lower, we have to expect, because of that bear shift in the short-term momentum, we have to expect the bears are probably going to put up a little bit more of a fight this time. Let them try twice. And once those bears wrap that noose around their neck, once they finish digging their own grave right now, you think, okay, where are their stops, right? Where are their stops? Think about it. If I can get a nice juicy signal candle, right, buying right into those stop losses, now the sellers are buyers because they're getting stopped out, and the buyers are now buyers. Now, there's a lot of variations of this 2-try failure, right? This is a classic example. Deep pullback, 2-try failure. A lot of examples of these in that free trading course I mentioned, linked up before. Here are a couple different variations of this that I would keep on your radar. For example, the best possible variation of this is that trap low, which is basically like a crown reversal pattern, right? A lot of times what happens is you get that trap low, and then because there's so many buyers that want that sucker, it'll jam higher. This is my favorite trade right here, right? My favorite trade is that bear trap, run those stops, and then where does the market want to go? You know where it wants to go. It wants to go right back up and punch out those highs. Now, before we get there, find that new trend line off that high. Find that new channel now off that low. Drill down. Remember, we're not trading off a 4,000 tick chart, right? This will be a much faster time from tomorrow in the trade room. And whatever you do, don't miss that first test. Right now, I'm keeping it simple right now, right? This could be a bear trap. It could be a seller failure pattern. It could be a pullback. It could be a strength move going higher. And again, if you don't know the lingo, if you don't know those setups yet, don't you worry. That free trading course, you'll learn it. So again, deep pullback, right? Trap in some of these bears, okay? Buy right into their stop losses. And then as the trade starts working for you, now the bears are trapped. The bears are now buyers. The buyers are buyers. And now as the market usually kind of slingshots and runs higher, we now start looking for that first test off the low of that channel. Okay? So a couple different variations of that. Here's another one you want to think about. Because we haven't had a deep pullback in a couple days, and again, this also applies to the S&P as well. Because we haven't had a deep pullback, we may easily get that big kind of plunge, right? And it may V-bottom because you got to imagine there's so many buyers probably lined up right now to give us any deep pullback we get. So if we do get that V-bottom, V-bottoms are tough because you never really get that, you never get a chance to get trapped in the bear, you know what I mean? A bear trap would be great, but that'd be the ideal. If we don't get that though, what if the market simply kind of V-bottoms here, right? Big wick at the bottom, you know what I mean? It V-bottoms with so many buyers here. If it V-bottoms, what will happen is it'll begin doing this. It'll begin to grind, right? And grind and grind and grind. Now, we talked about this on the S&P chart before. We talked about that pop and grind. What do you do on this? Pretty easy. You mark off that high. You mark off that low. See how I'm doing this, right? We look left. We find that prior swing, and we don't miss. And again, I'm going to keep it simple right now to keep the video short, right? But obviously, bear trap, like this example, we could get underneath the moving average. Bears come in trying to sell short. Their stops are nothing but cannon fodder, right? We can run this thing going higher, right? So again, if it V-bottoms on it, the hardest part about a V-bottom is that right when it gets right about up here, you start going, oh shoot, I'm gonna miss this thing, and you start getting FOMO. Right when that market begins to pop and grind going higher, you got to be careful, right? And again, guys, this is why I said earlier, I don't care how much money you made last week, okay? We're only as good as our next trade. Every trade is a brand new trade, a brand new opportunity to be disciplined and patient. When you get these V-bottoms like this, right, you're like, okay, give me the one, give me the two. Shoot, it's going without me here. Don't chase it as it goes higher. We don't want to buy high. We want to buy low, right? Buy low. And believe me, it's simple, but not easy sometimes, right? That's what trading is. Trading is simple, but not easy, right? Because when it moves, it takes a lot of restraint. Anyways, tomorrow morning, we'll make sure we're looking for that, right? That bear trap. We won't be trading FOMO, right? We'll trade the quality setups that, of course, we'll talk more about in that free trading course. So keep an eye on that on the bear trap. Again, I would love to get the bear trap right now. We'll see. We'll see what we get. Breakouts are ready. Now, the next big question is what does a reversal look like? So we talked about the crown reversal, right? The 1, the 2, the trap high. We talked about the crown reversal. As we go lower, what needs to happen here on both the S&P and the Nasdaq? They have to hold it, right? They have to literally hold that pullback off the 21, right? And they have to jump. And this needs to be very convincing. Now, what will usually happen is we'll chop around here a little while, and then something, right, it'll just blast, right? It'll rip lower. It'll be very quick, right? Because those will be buyers walking away. We have to hold that pullback. I can't sell that first pullback, right? I can't do it, right? We're still too bullish overall. But if they can hold that pullback and jump and really, again, convincingly jump off that moving average, well, now we have a 1, 2, 3 reversal pattern. Now we go out, we mark off that low, we mark off that high, right? We drill down, we find those, in this case, bull traps above the highs. We get above the moving average for a buyer failure, right? It's the exact same patterns that we talked about before. Now, a really easy way, whenever a market reverses, remember, the first leg and the third leg, Okay, first leg equals third leg on this reversal. Now, it's kind of easy on this one because you got last week's closes right there. So both the Nasdaq and the S&P, if the bears do get their hooks in this thing, you pretty much know what they want, right? So on the S&P, we take out that low. The bears come in. They hold the pullback, right? They don't go 1, 2, and then punch back up, bear trap. They hold the moving average, and they jump off the moving average. At that point, again, you want to be thinking about bull traps, right? You want to be thinking about traps above those highs because as we go lower, more buyers may come in. And again, the S&P, NASDAQ, they're going to want to take out those lows, right? And then from there, we might see a crown reversal 1, 2, crown reversal back up from there, right? This could end up being one huge range as we go into earnings, right? Again, next 2 weeks, right? This may be flushing itself out here into a brand new range here. So both the S&P and the NASDAQ, they have to pull back, and they got to hold that pullback and give us a very convincing break lower. Pull back, hold that pullback, give us a very convincing jump going lower. And if I were you, and tomorrow, right, I'll be looking for bull traps, right? Because as we go lower, we start getting pretty low down here. The lower we get, the more likely it is the professionals are waiting to get above prior swings. And again, right, the entry is kind of the easy part. The first leg and the third leg, right? Remember that first leg, third leg. And again, we're not predicting that reversal, right? We're waiting for proof, and then we'll go in, right, and trade that first test off of that high. All right. What do you think about this, guys? I'd love to know your opinion. Give me a holler in the comments section. Do you think we'll get that bear trap tomorrow? Breakouts, boy, how high could this market go? What do you think? Right. I'd love to know what you think about in the comments section. Let's wrap things up here tonight on the crude oil. Oil is definitely the uglier of the three charts here for tonight. Definitely not a chart you're going to print out and put on the fridge for mom at home. But what's the most important factor right now? Again, we are bullish, right? We are pretty bullish overall. We have an overall bull bias. Again, I'll put all of the longer term time frames down in the description of the video here. The most important thing right now is that failed rotation. Right? This is that failed rotation. So if you think about it, right? Bull market into a range. And just like we talked about on the S&P and the NASDAQ, right? We should be going lower and then rotating higher, right? And then you can see for yourself, right? That definitely is not the case right now. So what does that tell you right now? What does that failed rotation tell you? Well, it tells you that not only do the sellers have a great chance to grab this thing, but it probably tells you that, because we've had a couple days of some really big moves going higher here, we may just be looking for a deeper pullback, trapping some bears. Buyers always want to buy low. They want to find low prices, right, to buy at. So it's very similar. The game plan is very similar in that sense to the S&P and the NASDAQ. The one thing about the oil that's a little bit difficult is the trend line coming down. Right? For example, right? I really can't just trap in the bears and buy in the stops right now because that trend line's in my way. Whenever we have trend lines, okay, you want to think about either getting nice and low and freeing up some space, away from it, or you want to think about getting above it and using it as an entry point. Okay, so that's going to be kind of a key theme here on the crude oil. So, for example, as we go higher, right? As we go higher, I would normally say, let's trap in some of these bears right now and look for an entry on this. But as you can see, though, that trend line is a little bit difficult to get around. The better way to do it is to, and you're more than welcome to gamble on that two-try failure, but get up over and use that as we go, right? That would be kind of that breakout pullback entry. Again, trying to get that rotation going higher here. The other option, of course, would be now going lower. What I would love to do is take out some of these lows. Again, when we get failed rotation, it oftentimes just means the buyers are trying to get a lower price, right? This may not be ready for a reversal just yet. So as we go lower, I'd love to get, remember, that trend line coming down is a big hurdle. So this is a great example of where a crown reversal comes in handy. As we go lower, I'm going to use that two-try rule. I'm going to let the bears try once, the bears try twice, But think about how valuable now a trap is, right? Think about how valuable now that trap entry is, because now, even if we do end up back at that trend line and come back down again, we're already making money on that entry. The goal, of course, would be get that bear trap, which again is what I call a 2-try failure, with that trap low as a crown reversal pattern. Get back above that trend line, right? And then breakout pullback as we go. This would be kind of my favorite setup for tomorrow, right? Nice deep pullback, get underneath these lows in and around that 80-90, 80-67 level, trap in some of those bears, literally trap them in with a trap setup, as you guys are learning in the free trading course, right? That will be the best way to kind of whet your appetite, right? Kind of take a nibble on it, and then as we go higher there, that kind of what I call in the free trading course, that failure into pullback combination as we go higher, right? So take out those lows, trap in those bears, get that bear trap to avoid that trend line. If you don't get the entry for some reason, get up above it, grab the pullback. You know at that point now, we've now got low enough to attract buyers. We're now on the other side of that trend line, and there's a lot more wiggle room on that trade. Right? There's a much more higher percentage trade. I like the bear trap though, because of the reason I've talked about already. So keep an eye on that. And then of course, if they were to go lower, right, take out that low and hold that pullback and blast, right? There's that 1, 2, 3 reversal. If they do, I mean, look at this. There's plenty of space down there, down to that 79, 67 level at that low. So if they do take out that low, if they can hold that pullback, and again, it has to be a pretty convincing break through that level, because think about it, bigger channels here, trading range as a magnet, overall bull market. They really have to show us they mean business off that moving average. Then we can go out, find that new channel, right, and grab that, in this case, that bull trap off the high. And again, don't forget, whenever we see reversals, first leg, third leg, that will give us a lot more specifics as far as where that final target is. Because I'll tell you, one of the easier ways to grow your account quickly is simply to squeeze out, let your trades work for you. And again, I would imagine, right, these areas down here, that 80, 79, 91 level, that'd be a good spot for that reversal. And of course, as we mentioned earlier, as we go higher, I mean, you can see for yourself, right? The buyers have really struggled to break through this 82.66 level. If they do that again, remember, it's very bullish as it rotates off that low. Okay, so you're really going to be careful trying to short these things. I know these held before, but remember, one of these will break out, and it will probably be the one that you get too aggressive on. So follow the rules. Again, I don't care how much money you made last week. You're only as good as your next trade, so be disciplined. Buyers try once. Buyers try twice. This is exactly where you want a crown reversal if you want to call it top, right? And again, it could be off the high. It could be off this triangle level up here. But the key is, because of that momentum trying to punch those highs right now, trapping those buyers and literally try to sell as high as you can, right? Because you never know what's going to happen, right? There could be a trend line here, a channel right there. You get short off that, right? You make your first profit target. Stop moves down to point of entry, right? And then who knows? It rips and runs higher, because again, it's an overall bull trend right now, right? That's why it's so important when you're trying to call a top in a bull market like this. Make sure you get those bull traps. That will build in some cushion, right, on that short, all right? And then again, right, if they hold it, if they take out that high, they pull back to the moving average, they jump off it, okay, breakout time, now find that high. Again, I'm not going to buy that first pullback. I'm not going to chase it as it goes higher. That'd be foolish, right? That's FOMO trading. We're better than that. We can wait for that price. Remember, think about now, right? Those prior swings now, try to get that pullback for a bear trap, right? Get that deeper pullback underneath the moving average, trap in those, right? Those bears with a failure pattern, failure into pullback combo, right? Remember, once they really break those highs, then you've got all that momentum now for the buyers. Now it's a matter of what entry setups do we get off the low of that channel. I would love to use the prior highs as key support. Would love to use the channel as key support. And again, remember, first leg, third leg, right? Once we know how big that breakout leg is, that becomes the measuring leg. Once we know how deep the pullback goes, that's the anchor now, and we'll kind of factor that in for that target going higher here. 83.62 is a very reasonable objective right there for those buyers. But after that, though, it's basically 85, and I think it was 85 and a quarter is up top there. So be aware of that for the breakout. We'll see, though, if we can get some of these juicy bear traps. And I would love to know what your feedback is. I'd love to know what your game plan for tomorrow. I'm very curious right now how the earnings will come out this week, right? But my job right now is to focus on the chart, right? As curious as I am and as interested as I am about the earnings, we know what makes us money is how the market reacts to it. So stay disciplined tomorrow. I'll see you guys tomorrow morning, 8 o'clock Eastern time in our trade room. And don't forget, I'll put all the membership links, all the free trading course links, all the description of the YouTube video. I would definitely recommend grab that free course, learn the basics of the strategy. That'll get you going in the right direction. And if you have any questions, right? Any questions, the easiest way to get help with anything we talk about tonight, call the office, send us an email, jump on live chat. We're always here to help out. All right? And give me a heart in the comment section below. I'd love to know what you guys think about the analysis tonight, whether or not you agree or disagree. All right, guys. As always, thank you so much for tuning in and watching all the way to the end. I appreciate you guys carving out some time with me tonight on the video. We'll wrap things up here for now. Get some rest. Get some rest tonight. We'll see you guys tomorrow morning bright and early. In the meantime, be well. Be nice to each other. And you better be here next time, right? Adios, amigos. Bye-bye for now.